during the pandemic, we saw a lot of shift away from the hotels, and we saw the office folks coming into the multifamily space. But I still think deals are out there. It just comes down to a numbers game. Whatever your number is of how many deals you need to underwrite to get done. And the more deals that you do, the more contacts you'll have that are going to be calling you about off-market deals.
Right.
Your bankers might have off-market options for you. Your brokers are going to know that you can execute. And slowly but surely, you kind of build that pipeline. And I think if you're really struggling to find a deal, don't be afraid to do a JV deal with somebody else where you provide a lot of value to that other person and do a lot of the work yourself. But that way, you're at least getting a deal done.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Nick Simpson is an active real estate developer and investor focused on multifamily, student housing, and mixed-use properties. Nick, welcome to the show.
Thanks for having me, Sam.
Hey, man, pleasure's mine. 3 questions I ask every guest who comes on the show in 90 seconds or less. Where did you start? Where are you now? And how did you get there?
Sure. I started in Salisbury, Maryland, doing single-family houses right after the recession. One house led to 2, then 3, and so on and so forth, and then got into commercial and then multifamily. And now we're doing larger development and value-add deals throughout the Southeast, and we are typically in the $10 to $50 million range, and having a great time doing it.
That is awesome. So the $10 to $50 million range. What are you doing? I want to hear the lower end of that number. What are you guys doing right now in the $10 million range?
Sure. So that's the probably 70 to 120 unit complexes. Probably just a little bit above that might be a hotter market where you're getting, maybe it's a little bit more expensive per unit, but you're in a really good market and you might be, paying 17 to 20 or 25 million. But you're still getting around that 125 units. Really, you have to kind of balance between making sure you have enough economics in the deal to get, the proper staff on site and oversight to it. But I do think that you're kind of in an area where maybe the institutional folks aren't quite pouring a ton of money, and you might be able to peel one away and get a good deal.
Yeah, no, that makes a heck of a lot of sense. And those are more than I would assume on your value add side.
Absolutely. So those value add deals are typically heavy value add. So you had mentioned we're developers, so we like to use our heavy value, use our experience in construction and really do that heavy value add or heavy lift type of property. It really needs a large tenant reposition. You're going to be getting in and doing a lot of the interiors, but also the exteriors of the property. And you might be doing foundation issues or fixing roofs, but we typically are doing that type of property that might scare away other people just because we have the experience in getting it done.
Talk to us about that. How do you define, or how do you find a project that you say, hey, you know what? Because a heavy lift or a heavy value add comes with a lot of risk, I would assume. I don't have any firsthand experience in this. Comes with a lot of risk, I would assume, because like you said, you're doing not just a heavy lift, but a heavy tenant reposition. How do you pick a property? Because I think there's plenty of those properties out there. How do you pick those that make sense and those that you're like, no, we can't turn this one, but we can turn that one? What does that look like?
I think it always starts with location, and that's, I think, obvious, rule in real estate. You got to make sure that you're going to have you're kind of in the pathway of progress, that you're not like the first project that's of that type getting into that reposition. Maybe you're seeing some new product getting built nearby, and then that kind of helps bring your comp set up. The other part of that is, when I say heavy value add, I don't mean the property is in disarray completely. There's still people living there. There is still a heavy and robust enough cash flow to support making distributions to investors, but also paying for the property management. And I think it's that niche that we're looking for, where it's still sustainable, but with our large construction work that we do, we really see a big pop on the other side.
Right. Yeah. You're looking for something where, like you said, it's sustainable. You're able to turn it, but yeah, it still needs a lot of TLC. such that you guys can then collect, like you said, on the other side. So that sounds kind of like a unicorn deal. I mean, are those hard to come by right now?
I think everybody talks about how difficult it is to underwrite deals because there's a lot of capital in the markets right now. I think there's a lot of shift away. During the pandemic, we saw a lot of shift away from the hotels, and we saw the office folks coming into the multifamily space. But I still think deals are out there. It just comes down to a numbers game. Whatever your number is of how many deals you need to underwrite to get done, and the more deals that you do, the more contacts you'll have that are going to be calling you about off-market deals.
Right.
Your bankers might have off-market options for you. Your brokers are going to know that you can execute, and slowly but surely you kind of build that pipeline. And I think if you're really struggling to find a deal, don't be afraid to do a JV deal with somebody else where you provide a lot of value to that other person and do a lot of the work yourself. But that way you're at least getting a deal done.
Right. Yeah, absolutely. I mean, that's something that, again, I don't specialize in multifamily at all, but certainly have had plenty of friends and people like yourself that, will call me with opportunities, and they'll say, hey, do you want to help us with this? Well, sure, by all means. I mean, if it's a home run deal and makes all the sense in the world, yeah, I want to participate. Like that's, and again, what I always say to other people is like, look, if you're fishing in that pond, Nick, I don't need to go throw a line in the water. I just need you to call me when you got a fish on the line, and I'll help you reel it in. So that's
exactly what we do.
Yeah, yep. That's 100%. I love that. So that's absolutely awesome. Talk to us about your development side. You told us a little bit about your value add projects. What are you guys developing right now, and what makes you decide whether or not to go into a market and develop versus just look for existing stock?
Sure. Well, development is a whole nother animal. And before you get into it, you really need to have a local expertise, I guess I would say. You really need to understand the local politics, the local boards, the local zoning rules. What are the demand economic drivers? Is there going to be just this crazy unicorn law that you didn't know about that is just going to kill the project? Something that maybe your competitor has gotten passed in the past, like in previous legislation. All those things really matter to deciding when and where to develop. So we do our development in Salisbury, Maryland, where we have a lot of the local connections. We don't really do any development multi-states away. But we have a really good set of contacts here where we can get our projects to move forward. Those projects currently are ones in the pipeline is multifamily, a really large scale multifamily, and then we have a student housing project that's currently coming out of the ground. And in this market, I've partnered. My partner is the owner of the general contracting company, and they've done hundreds and hundreds of millions of dollars in construction in our market. And all of the subcontractors really help control schedule and pricing. And those things are really important. I mean, all the way from the day when you think about the idea to the day that you open the project. In the student housing case, it was a 5-year timeline before we actually open the building. There are so many things that can stop you. And having the right people in the right seats is critical.
5-year timeline. I want to dig into that project, I guess, a little bit more. But walk us through, maybe even take it back a few steps on the development side. Are these projects that people come to you and say, "Hey, this is entitled. We think you should take it and build it out"? Is this something where you guys go out and find the raw land, get it entitled, then build the project? What's that process?
Well, I think more people are starting to call us about projects now that they've seen us execute on a couple larger scale ones. To start, though, we had to build a track record in our community, and that was just doing houses in the beginning, and then it was getting into commercial space, and then it was multifamily space, and not being a jerk to the building department, the people who are issuing permits, and making sure that the boards, like the historic district boards, and every time you're in front of those people, you're building rapport with them, so that when we came to this larger project called the Ross, which is a 358 bed student housing project, which is actually 2 buildings right in downtown, one of which is the tallest building in our area. It's like a 14-story building. The other one's 7 stories. And it really turned into this pretty large complex in the downtown area.
Wow.
And all of that took a ton of zoning. And that was a lot of leaning on the local representatives to get those type of projects done. But to answer your question more specifically, like on that project, we had to acquire 3 separate parcels, combine them together, get the zoning for the height, the density, the historic approvals. We had to keep some historic facades. We actually ended up passing a tax law that had to go from local government to state government. Even the governor had to sign off on our tax legislation, but it phases in our taxes over a 20-year period. So it really saves, returns, all of which was started because of the coronavirus, which if we could have gone without the coronavirus, the project would have been great. But, when you get stopped, you just got to figure out a way to make the deal work. And in that case, we had already acquired everything, and the coronavirus came out of left field, and we decided to make some tax legislation that not only helped our project, but helped other projects in the area continue to grow. And you can kind of hear like there's so much more that goes into the development piece. It's not something I would get into lightly. Really need to have strong backing. There's quite a bit of money that is required up front, and I think there's just a lot of opportunity in it. But you got to have a thick stomach.
Yeah, you do, and it sounds, when I hear all of that, and again, I'm not a developer. I hear risk. I hear a lot of heartburn, and a lot of pivoting is probably what I hear. Like, oh wait, now it sounds like you're constantly in flux, trying to figure out the right way to get this done. Is that a fair assessment?
It can be, and that's where it comes down to the having a feel of what the local market wants. If you have somebody who is really tuned into downtown Charlotte development, they might be able to quickly put together a project that's just going to check all the boxes and get through the zoning in a quick year timeline. Right. Have all the contacts, the architects, and quickly they got a development in the ground. That's a pretty tight knit shop, but there's probably not too many of those shops out there. That's probably our group here in Salisbury, Maryland. Like the new projects we have that are coming down the line are pretty easy for us to get on the boards, but it takes time to get there. And that's why we balance that out with a value add approach on the other side of the business, so that we're not all eggs in one basket, especially the most risky portion of the real estate world that I know, which is development.
At what point in time did you know for certain that you had a viable project? You said, "Hey, we're there. This is going forward," and it's all systems go. When did you know that?
I think you have to know that kind of early on. And when you say all systems go, I think you're probably referring to the shovels going in the ground and you're closing up financing and investor capital's coming in. Well, I see it as from the development perspective, from our seat, all systems were go, and we started really investing in like the contract level documents or the blueprints for the property. A lot of people don't realize, if you're doing larger scale development, you could be millions of dollars into soft costs before you start. And before you pull the trigger there, I think that's when you know that, okay, zoning's in place. We're in a pretty compelling, we have a pretty compelling idea here. We've done some feasibility studies and checked it, on appraisals, and there's going to be a bank and, good financial backing to it. It can be quite stressful if you don't have those contacts in place, and building those take time. And again, I think that's where starting smaller was probably critical for us. If we hadn't have done multiple smaller projects in our area, I don't know that we would have been able to do the larger.
Right. Yeah. And that's, I guess that was me. My question was, how did you gain the experience on the development side to then have the courage someday to take this down? That sounds like your answer.
Yeah. There's no secret to getting to large scale. If you look at any of these large companies who are doing these very large developments, if you wind the clock back enough, whether it be second or third generation, if you go back to its origins, it probably was quite humble. And right. It's just one after another. So getting started is always my biggest recommendation. Just if you want to get into, like, we started with home building, and obviously those are much more manageable bite-sized deals, and then you carry that forward and you can get into the bigger stuff.
Got it. Talk to us about the owner or your general contractor / partner relationship. Mm-hmm. How did you structure that, and why did you structure it that way?
So we kept it pretty clean line so that he has to wear the general contractor hat. He still has to deliver the product on time and in the guaranteed maximum price. But he also became an investor, which we included him on the general partnership. And when he agreed to sign on the loan for the deal, that really kind of gave us some additional comfort, because that's a lot of risk that he's taking on, saying, yep, I'm going to deliver this project on time. This is well within my wheelhouse. This is something we've done 100 times before. No problem. We've got it. And that kind of just organically happened. What he first asked for was, let me bid the project just as your general contractor. I'd like to earn the business that way. And that just happened to kind of blossom into more of a additional partnership. And he's part of the general partnership, one of the key members of that general partnership. We have other partners as well to pull down a large development deal. But in this case, it really, I think, was beneficial to have the full transparency on the construction side, especially with what we've got going on with the inflation and labor shortages and material issues that are currently plaguing all of real estate right now.
What are you guys doing on that front? I love thank you for breaking that down. I think I've heard that kind of method before, bringing the general contractor on as as not just an investor, but in this case, also a loan guarantor. That's a pretty strong bet on their capability capacity to deliver. So that's I think that's a fantastic way to structure that. Kind of really aligns incentives between you and the actual general contractors. That's really cool. I love that. Talk to us though about the labor and materials shortage, inflation. I mean, a 5-year project gives you a long exposure to whatever in the world's going on in inflation right now. How are you guys hedging that?
Well, there's a couple different aspects. The construction period is about a 24-month period. So we have a 2-year exposure on the actual construction. And certainly from the day that we started this to now, prices have gone up. The good news is rents on the other side have gone up as well to offset a lot of it.
Right.
Trying to not count on that is the mindset I continue to keep everybody in. Let's not count on a higher rent down the road. Let's not count on interest rates coming back down because of a recession or whatever. Let's just manage the problem the best we can right now. Right. Let's value engineer the project. Let's take away things that aren't absolutely critical. Let's not hurt the integrity of the building. Like, we keep the noise qualities of the building good. Let's keep the waterproofing qualities top of mind. But we can maybe cut some of the frills, maybe some of the finishes that are in maybe the lobby. We can do more with better design and more splashes of color with paint, rather than relying on a fancier floor or a marble wall of some sort. So we took a really close look at what we could do on the scope to dial it back. We worked with our property manager to see what they were doing, because they're kind of a best-in-class developer. In this case, this is a student housing project, so we're working with American Campus Communities, one of the largest owners and operators in the country. So that's kind of relying on the experts to kind of give additional feedback. And then this is where we really rely heavily on that partnership with our general contractor, who is locking in a lot of our major subs like the HVAC and plumbing. We've put no escalation clauses on those contracts, so they must hold the pricing throughout the duration of the project. And I don't think they would do that just for anybody on the street. They're going to want some kind of guarantee that the project's going to be funded and that they're going to be on schedule, and that they can count that this is going to be a real job that's going to be profitable for them, provided they stay on time and on track, which I think our general contractor can do.
That's really interesting. You're not putting any escalation clauses in your subs bids, and I guess that's offsetting some of the risk from you to your subs. Of course, then it's incumbent upon them to figure out how they're going to offset their own risk. That's you can't obviously fix everything down the line, but you can fix it on your own side of the equation. It sounds like
you do the best you can to take care of your portion of the deal, right. And those are large companies. I mean, these are large multi-million-dollar companies that have sophisticated people at them who can go to their suppliers and pass it along, because the suppliers are giving a lot of difficulty back to them. So it's just right now it's a very interesting dynamic. I think developers have typically been in the driver's seat, just getting to bang the table and no, make it cheaper, and everybody was giving in.
Right.
But that's not quite the case right now. You might just have to accept their pricing, but maybe you could add, hey, we'll take that pricing, but can you at least lock it in? Like right now, that seems like even just a big ask. So
right.
That's kind of where we're at in this current market, and hopefully we can get back to more of a stable time. But gas prices don't help, and you name it. There's always going to be pressures on it, and hopefully we can see it all, kind of smooth out here soon.
I love it. No, that's great. Thanks for kind of explaining that for us. Tell us about your value add deals that you have going on down in the Southeast right now. What are some fun things that you are looking forward to on those projects?
Yeah, so we have a couple of deals going on in Atlanta, in the Atlanta MSA. Got specifically in like Decatur, and they're larger or heavy value add deals, and they have been going exceptionally. The market is extremely strong. We're seeing really quite a robust rent growth that we didn't quite expect.
Right.
We're seeing a lot of the people who have potentially, I think a lot of the folks who have held these properties for a long time kind of feel like it's the sell time, and that there's probably not a lot of runway left. But when we look at the economics of these deals, they're still under market from where they should be, and there's still additional population growth coming. And there's the value add that we can add to the property, like washer and dryers in the units, and better landscaping. And I'm not just talking like light landscaping. I'm talking like really like cut the trees away, add some, amenities that are really nice, like really nice playgrounds and grilling areas and stuff that really make it a home that can drive up the rents. And that's what we're seeing. And that's no different than any other market, but we're really excited about what's going on down there. Have a couple of deals that are in the pipeline, hopefully be closing. That we're on track to close another one by the end of this quarter, and pretty excited about just the continued rent growth of Atlanta, like we are in many other places.
Right. Nick, that's absolutely fantastic. Thank you for taking the time to really break down the two sides of your business. And they are unique and they are as different from each other as they could be. I can really imagine on the development side, especially in the student housing, all the way to value add there in Decatur, Georgia. That's loads of fun. Appreciate you taking the time to break all that down for us today. If our listeners want to get in touch with you or learn more about you and the projects you are involved in, what is the best way to do that?
Certainly, you can check us out on our website at mentiscapitalpartners.com. You can email me at nick@mentiscp.com. I'd be happy to jump on the phone or Zoom call and touch base with whatever questions you might have.
Awesome. And Nick, can you spell your website there for us real quick?
Sure. Mentis is MENTIS. And then you can do Capital Partners, or you can just do CP.com.
Awesome. Nick, thanks so much for your time today. Do appreciate it.
Likewise. Have a good one.
You too.